So thank you everyone for calling us for this session, and I'm very excited to be there in Bombay today and such a lovely audience, and thank you so much for BW team for inviting us for this. Since this is our first session of the day, so I would request everyone to, I think, to share our experiences. I think this industry is not very old like the entire real estate industry, which has been there for the years time. This industry, I think, while it started in 1994 with something called Coworking, and then it started in SFO, and then it came back towards London side. But I think the entire essence of this industry, everyone started knowing was mid-20s, around 2015, when everyone started knowing and talking about it. COVID came, and COVID gave, like any other businesses, COVID put down everything on a hold. The growth story in fact, for the flexi office space also went down. But I think like the businesses who came, who have the strong principles, come back very strongly, and that is what Mr. Batra was also talking about it. Flex spaces came back very, very strongly. And I'm happy with the jury here sitting and talking about, and the speakers here talking about it. I'm sure it will be much more knowledgeable. Just to give you a little perspective, I manage Colliers India flexi business, and our entire research has been around this business very, very strongly. And there are key few things which I thought we will talk about it, and I would like to share it with everyone here. One was that of the 25 million of gross office space absorption in the country till June, we are talking about H1, which is till June, flex contributed around 18%. Likely, probably by end of this year, we possibly might see it may touch around 25%, but that's a good start. Knowing what's happening globally when it comes to real estate, still it's a sizable growth here. Out of 4.5 million square feet of the flex space demand witnessed in H1 23, Delhi NCR was leading around 32%, followed by Bangalore 29%, and Chennai and Pune around 17 and 13% respectively. That's another thing which is happening. Interestingly, the top 5 occupiers of flex hubs, like in Bangalore is Whitefield now has started showing a lot of promise, which is coming up in Bangalore, Noida Expressway and Noida Sector 62. In NCR, Baner Balewadi in Pune, accumulated accounted for almost half of the flex space activity first half of the year. So that's part about it. Over the years, while the technology companies have been prudent in taking the maximum space for most of the space in the country, but which includes even Bombay, NCR, and even south part of the country equally. But the demand for BFSI and engineering companies keeps on growing. So that's another cue which I wanted to share with everyone. From a stock penetration market, so India office market, real estate, commercial, grade A occupancy market is around 680 million square feet. Now, out of 680 million square feet of a grade A stock, the flex space penetration in India is at around 40 million square feet. So which means, and these are the ready stock today, and it's an operational stock which we are talking about it. Compared to 2018, the India flex stock has shown 2.5x growth. So this is from 2018 till H1 2023, while Hyderabad has shown over 10x growth. In the same period, the high volume markets like Bangalore has shown 2x growth. So the markets are different, behave differently, but there are a few cities which has grown beyond everyone understanding on that. Within each city, the flex stock is a way on the overall stock of the city, like Outer Ring Road in Bangalore, High-Tech City in Hyderabad, Baner Balewadi in Pune, Andheri East in Mumbai, Noida Expressway in Delhi NCR, and Guindy especially in Chennai market. So that's the way most of the city have been growing and seeing the growth altogether on that. Now, while these are things which are happening in this industry altogether, but when we are navigating uncertainty, this is important thing, and that is where the building we are talking about resilience in flexible workspaces altogether. So my first question will be to the panel here, and I would like, in fact, if we can have Umesh, if this question is for you, and if you can just help us to talk about it. How well do you understand the diverse needs of the clients? Because you have been managing this business for the longest time, right? So, and how do you adapt the offerings to cater the growth?
Yeah, morning everyone. Good to see a lot many faces at 10 a.m. in the morning. It seems that flexible office space is definitely a emerging sector, and specifically with BW incorporating in their theme of things as well. Glad to be part of the panel. So the name of our brand is Devx. Just a quick understanding for everyone. We started the journey from Ahmedabad, and it's been 5 years that we have been operating in this segment. We are predominantly a managed office space player. We started with a hybrid approach wherein 50% was co-working and 50% was managed office space. So we understood the psyche as to how we have evolved from a hybrid operator to a managed office space segment. With respect to how our customers have been adopting this segment, up till COVID or probably mid of 2020, we had roughly 200,000 square feet of portfolio being managed by us. And similar to industry, we also grew 4 times. And we spread it in multiple cities. With our presence in 10 cities today, we are catering to clients ranging from IT, ITES to engineering to BFSI segment. What we have understood and realized is the fact that they are not looking for office space only. They are looking for flexibility of having a presence in multiple cities. They are looking for a value addition where they can retain their end employees by providing some certain freebies with respect to, let's say, I have a pet care zone in all our office spaces. We have a gymnasium in our office spaces. So these sort of things are probably helping them to retain their employees or probably pushing them to bring them back to offices, which is now being adopted vividly as a primary tool by the employers to pull them back to, coming back to offices. So I think that is one thing that we have learned and probably passed on those learnings to our clients as well. And it is supporting them to attract and retain newer talent.
Thank you. And in fact, just to take a cue from that question itself, and this question comes to you, Sir Ninad. Technology. Many of us have been talking about technology for the longest time. How do you foresee this business on technology? Can this real business can move towards technology? Since you have been venture capitalist and seasoned venture capitalist for the longest time, how do you see this business?
Thank you. Good morning. It's good to be here. Always good to see UrbanWrk. Brings back fond memories and other friends as well. So technology has to be the business of flexi spaces. You cannot say that convergence has to happen between the employer who's trying to go in there for investment, for flexibility, additional, and the employee, the people working who want experience.
Correct.
Both these have to converge. They are on different tracks. And that convergence can happen if you start using technology. Good experience is impossible in any field, more so in flexi spaces, without absolutely pervasive use of technology.
Thank you. In fact, the same question, Paras, I wanted to have your perspective also because your entire business model is on technology, right?
Yeah.
So if you can just put down some thoughts on this, please.
First of all, really happy to be here. Extremely glad to see a dedicated platform from a media perspective on Flex. And thanks for bringing me in this question. I represent Qdesq, which is a tech platform to discover and book flexi spaces across India. Very clearly, tech, even though one of the largest player in the world called itself to be a tech platform, but it was a co-working space.
Correct.
It's a real estate business. It's a sublease model. But tech comes very, very handy as a very strong enabler. To first get an occupant.
Yeah.
Platform like ours, and there are, the entire co-working industry, all the operators have a fabulous digital footprint with which occupants discover them through online or offline channels. And once a lead becomes an occupant, it's all about services. So tech plays a very important role in very, very small micro experiences like room booking, meeting room booking system. So there was a fashion 3-4 years back, slightly pre-COVID, when everyone wanted to have an app of their own workspace. But occupants, their employees, they feel that the most expensive real estate is their mobile phone, so they don't want to download any app. So now QR code based or calendar based meeting room booking system. There should be a feedback complaint management system, but the turnaround time has to be very, very strong. So the first moment of truth where tech comes in is to get an occupant, and then the second, which is the most important, is retaining the occupant and the renewals. That's where the efficiency ROI is. So tech will always be at the back end and not really a tech business. That's my take on it.
Thank you. I think this is very important, and this is essential for any business enabler. And tech is a big enabler in this business itself. And once you bring a client, the client comes in. One of the key things which people have been talking about, what strategies? And this is my question is moving around to Harsh. Harsh, if you can, probably you talk about more in detail on community living, which is community now. Co-working or a managed office place or a flexible space, many times we call as a differentiator is community. So what has happened in last 2-3 years, right? People have been talking about it post-COVID, and if you can talk more detail on the community side, please.
Hi, good morning. So we were born in pandemic. Our first center came in 2020, March 15, and 23rd was the lockdown we started our business. And the first client we signed on June. So in 2020 and 2021, we saw all the pandemic, all the lockdowns, we have seen everything. So first key event we had was having vaccination at one of the centers. We converted one of the centers into vaccination, and we vaccinated more than 1,400 people, 1,400 employees. And that's how we started engaging ourselves with the companies, and that's how first of 2 centers got 100% occupied because of that event. So events and well-being of employees and the companies were paramount at that time, and till today also. If you see all the surveys, employees' well-being, wellness, and their health and safety is required. And to enhance that, we have done multiple events, multiple tie-up with multiple medical institutes, with multiple training, gymnasium trainers. We have got gyms in all of centers. It's a mandatory to have a gym in centers, wellness for them. And plus engaging all the employees in these events, taking care of them. And hence the collaboration happened. So these are few takes we have taken from the COVID time. And now we have learned that, and now we are progressing with that only. And we have seen a good result by doing such events and collaborations in multiple cities. So we have presence in multiple cities. So it helps a lot. And what you have seen, it will thrive to have a more green building and wellness certificate. We are the only one who has got all the certificates for all our centers. And this is how we are seeing changes happening in that centers.
I think it's important because I think even if the business is born on the difficult days, right? But the business which has principles and the right deliveries in hand, right? It's tend to grow, and that is where I see about the business now. Community plays an important place, right? To bring a client in, but to sustain a business, the pricing is an important aspect equally. Now, with the world which is changing and getting aggressive when it comes to competitive pricing, how do you foresee, and this question is towards Yogesh, and in fact, you can talk more detail on that, competitive pricing. How do you see business moving ahead when we are getting into competitive pricing?
First of all, thank you so much for having me here. Really proud that we are having a dedicated event for flex industry. Coming back to your question, I think pricing plays a very, very important role. Obviously, after an important factor known as location. I think location is a driving factor of all the pricing. There are micro markets, and micro markets have their own pricing. One of the key factors driving the pricing is the optimization that you can have in the layout. While designing the co-working space, there are different segments of co-working spaces. There are different segments of customers that you're targeting to. We have lived in an era where people used to give 200 square feet per person. We have lived in an era where it was 150, where it was 80. Now it's coming back to about 50, 70. The optimization of the layout and having maximum number of efficiency is what drives the pricing, I guess. And it's very, very important for the customers. For us, what has worked primarily is focusing on micro and small businesses as opposed to a player who is working on a managed office. Vertical managed office is majorly focused on large enterprises. We're focused majorly on micro and small enterprises between a team size of about 4 to 20, 25. And for them, pricing even matters more. So I think what has worked tremendously well for us is selection of a good location, having a good relation with the landlord, and having a good layout optimization, identifying with the help of technology what areas people are actually utilizing, what areas people are not utilizing, removing unnecessary areas, and having the actual areas that people are utilizing. That has helped us get the right pricing. And I would not say pricing is the only thing that matters to the customer. It's a product to price ratio. There is WeWork, there is premium operators operating in a higher price range. There are standard operators operating in lower price range. It's the different market segment. What has tremendously worked well for us also is our relationship with the landlords. So we've not worked on a leasing model with the landlords till yet. We worked on a revenue sharing model with the landlords where we feel that if the flexibility is coming from the demand side, the operator has to be flexible and the landlord has to be flexible at the same time. If this chain completes, we're in a good mode. So till now, we've worked on a revenue sharing model with the landlords where they've kind of helped in riding the wave of uncertainties is what we're talking about, and has helped us getting the right price for the customer, getting the right benefits for the landlords, and getting the right optimization that we need in the space. So I think that's what has worked for us.
No, I think it's a fantastic thing. I think collaboration, whether everyone thinks about the client side, but again, the partners are landlords equally. In this entire business, which is getting sustained and the growth, this cannot happen if we do not get support from the landlords, who are the partners in this entire journey. Now, moving ahead, and Ninad, this question is towards you again. While we talk about getting a new client, what about retaining clients? Because the world is different now, right? The funding has slowed down. US has slowed down. People talk about recessions. People talk about the challenges, what's happening in the West Coast, Europe, China, no China, right? The money is not flowing in. Now, most of the clients in this kind of a world where I see it is having probably a bootstrap firms or a startup firms, which was funded well. Now the times have come, which is a difficult times. Now retaining them and managing your own cash flows and ROI, how do you see that?
So I'll try and be brief. You asked me such an intense question, but I'll say it in the next 2-3 minutes. Funding is available. If the idea is good and you're executing it well and you're running a business properly, funding is not a problem. Yes, funding is not available if you're not running the business properly. So the reality is now slowly struck back, and it is good in the long term. So for this kind of ideas, if you have a great idea, capital is chasing good ideas. We fundamentally believe from an investor perspective that this 20% only today, which is flex, will become upwards of, it will flip. Only 20% will be in non-flexi spaces. When will it happen? We don't know. Will it be 5 years, 10 years down the line? We have no idea. But in that journey, all good ideas with strong execution will get funded, in simple words. There's no doubt in my mind. Yes, other than the funding part, early stage, of course, are getting funded. There's no problem on the early stage. But today, on the later stages, of course, there is a little bit of reality in terms of the way the VCs look at this industry. By and large, we are still very optimistic. By and large, we still feel there's a lot of headroom in India in this industry.
That clearly shows from 6%, this entire business has grown to 18% of the entire stock in this country, right? Like I rightly said, 680 million to 40 million. And 40 million will not happen when the principles of the business is not right. But again, Paras, again, this question, I want to add, probably if you can add some your perspective on it, because you are seeing this business in a different perspective, right? Like many of us who are in the business to build and grow, you are in a business as a technology guy. How do you see that? And how do you see growth further?
The principal question being the retention of the occupants?
No, yes, if you can answer that also.
On the retention of occupants, I think hats off to a lot of operators. Initially, first 3 months are a bit toughy for them in terms of understanding the client, the services. But I think the way they have learned, brought in resilience in terms of services, it's great. I see when we started this business in 2015-16, the average occupancy life cycle for co-working was around 6 to 8 months. Now it is going around 14 months at a platform level. This means definitely there are people who are staying there for 3 years as well as 6 months. So I think year on year basis, we are doing a good job in retaining the clients. In terms of the overall growth of Flex, which was the second part of the question, when we started, the adoption by occupiers was not even 1%. We are looking at least 18% to 20%, and in some cases, people are going all Flex. Tier 2 non-metro business in 2018 for us was not even 2%. It is 32%. The whole decentralization of office space, offices going to where people live, not everyone coming to that one office which was pre-COVID. So all these are very strong cues towards hybrid, flexible, and huge demand for speculative co-working. 80% of the leads are under 30 desks. So you can't have a managed office for 30 desks. I mean, managed offices basically should start 200 desks plus. And if the 80% of the lead flow is under 30 desks, there is a huge need for speculative. And that's what he said. He's absolutely bang on. In the top micro markets, we see speculative hardcore co-working doing really well. And the resilience, which is the broad theme of the topic, comes from the layout configuration, the whole deal structuring. There can never be 100% occupancy, but if you are at 92 to 94, you definitely have a strong ROI, which gives you money back in 3 years. So that's it.
So if I may add, I forgot to mention about retention you asked. See, one of the key factors is churn rate when we evaluate it.
Okay.
A high churn rate is a story which is not told, so you have to dig into facts. So churn rate being low is very critical in this business if you are going to attract investors.
Trust me, I know some operators who want high churn rate, because I'll tell you where and how they play around. The story behind it is that your contract, the lesser your contract, the moment it comes for a renewal, prices go up high, right? Which is a different business model for everyone altogether. And taking a cue again from Paras, what is talking about the ROI, right? Any business, the reason anyone start business is on profitability, right? There's entire essence of the industry. While someone can say startup, someone can say it has grown further, someone will say that it will grow further. But the essence of this industry has to be a bit of positive, right? Because otherwise, I think top line is something not now investors are looking in. Everyone is looking into high profitability or a better quality of a work with a better ROI. Now that's coming up for you, Yogesh. Now, how do you see when you have to maintain a better ROI or a better EBITDA, right? But the client expectations equally are getting higher and bigger. How do you see both can work together?
Thank you for directing this question to me. So, a key principle or objective in running AltF for the last 6 years has been profitability. We've been profitable since day one, and even haven't gotten negative during the COVID times. Our belief was to build a very strong foundation, and when we say co-working spaces, it's very similar to hotel industry, or you can say airline industry, where occupancy matters the most.
Correct.
Occupancy drives your ROI to a very great extent. And when I talk about occupancy, obviously it's the absolute occupancy that matters, but what is the occupancy dependency on one client also matters. So when you make investments, you hedge your risk with different investment instruments. Similar to co-working spaces, what has worked for us is to hedge the space for different clients. So for example, the average size of a space that we have in our co-working space, for example, our co-working spaces of, let's say, a 500-seater, our average room size is 5 seats. So we build from 3 seats to about 20 seats to about 30 seats, targeting those micro and small enterprises. So our dependency of occupancy on one client is about 1%. So that's what we tell to the landlords, that why we're able to achieve 92 to 94% occupancy, as mentioned by Paras, is because of lesser dependency of occupancy on one client. So that has tremendously worked well for us. Definitely, on the outside, from the outside, it looks like services might be very standardized, might have not a great impact on the ROI or profitability, but it impacts in a huge way. So in parallel to the occupancy that you have to achieve, obviously the churn rate matters a lot. And if I talk about data, every month, 50% of our customers increase their team size, maintaining the occupancy that we want to maintain a better ROI. And obviously, the escalation, the renewal agreements matters a lot when you have to maintain the ROI. So principally, occupancy drives it. And if you have good services, you'll keep it stable.
Maybe some more perspective I wanted to hear on the same subject, please.
On retention, I can say because we signed our clients in 2020-21, we got the lock-in of 6 months and 12 months. So retention, we have 98% retention, and more than 70% of clients are 36 plus months locked in, and more than 50% of our clients are more than 5 years locked in. So basis of services, what we offer to the clients has really helped us in retaining our clients, and plus the quality building and quality product really helped us. And like he said, optimizing the space and giving the right value at the right price and the quality services has really helped us in winning the clients and retaining the client.
No, retention is a key for any business, and if you are able to retain your clients, which shows that the confidence level which the client has with your firm. But again, I'm coming back on the ROI, because this is a subject which I think many of us wanted to understand. How do you anticipate the business, and where do you see the flexibility of profitability moving ahead? So maybe if you wanted to add on that, please.
I have a slightly different opinion from what we heard. That's primarily because of the business model that we are into. What we are listening right now is the fact that co-working spaces operate in a fashion wherein there is a higher and lower, and there's some attrition with respect to occupancy levels. But when it comes to managed office spaces, and I'll back this up with data as well, what we are seeing from 2018 to 23, the growth that we are seeing, the flexible office spaces, that is predominantly being contributed by the managed office spaces in terms of numbers. And there's some reduction with respect to co-working spaces being adopted across the country. There's more tilt towards hybrid, and there's a complete new segment of managed office spaces which has erupted in the last 4-5 years of time frame. In a managed office space solution, we don't see lot attrition happening at a center level, because majority of the clients that we sign up is from anywhere between 36 months to 42 months of time frame. That's a lock-in, and the agreement tenure goes from 60 months to around 9 years of time frame. So retention probably isn't that much of a larger challenge when it comes to managed office spaces. Pulling up an enterprise client, yes, that cycle might be longer when it's compared to a co-working space service provider, but retention probably is slightly comparatively easier when it comes to co-working spaces. On the first question of what you asked with respect to funding, fortunately I happen to sit on both sides of the table. I have a portfolio of around 16 to 18 companies in which we have invested into. I am still not seeing good quantum of funds coming into this segment. Yes, few of the larger players have raised, but majority of the industry is still running on their own corpus, on the funds that have been received from family and friends, or probably family offices in their cities. The traction probably would be much higher the moment VCs and private equity players start pumping in money, which we are starting to see in the top tier cadre of in the operators, but that's predominantly coming from the private equity players and not from VCs. There have been 1 or 2 examples wherein VCs have pumped in money, but this business model is still not something which has been adopted vividly by the VCs. The moment that starts to happen, technology also would start playing a very key role in kind of expanding each and every operator, and then the scale would multifold.
I think rightly said, because for any industry, whether a real estate industry or a co-working industry or a managed office or a flex, whatever name we talk about it, I think the key growth will be when someone will start investing in. And that is where the VCs will start coming in. Yes, we have seen few funds have come in, and few funds we will hear it soon on the few funds coming in this more industry more. But again, the principles and the confidence on the business and the quality of an output of a business, I think is the key thing. Also, like you rightly said, that there are organizations when it all started, again, I've seen this entire journey altogether. When it started, it was co-working. It was single day, 1 hour, right? Technology, that's how it all started, right? People have been talking about it. Then there was someone who came in and said, no, we will not be in the same side of the business. We will be on the other side of the business, which will called managed or the enterprise, what they say about it, right? But the business stories have been very, very different, right? Maybe someone was red before, but they're green now. Maybe both are green now. That's how the business principle is. I think somewhere the learning came post-COVID, right? Where the spec spaces were coming down and more enterprise way of taking a space so that the returns come faster. I think expectation of the investors are very critical. So maybe Ninad, if you can add on the investors or the VC perspective, how do they understand this business and what's their thought on this business going forward?
And also आप portfolio में कब ला रहे हो flex
Yes.
operator 100x without VC के portfolio में flex operator कब आ रहा है?
So I think I'm the only VC in the room, so I'm going to get bashed up. I have some friends who will save me if I get bashed up. But yeah, so 100x invest in early stage startups. This is not a commercial for 100x, but we invest first check. We are invested in 127 startups so far. By definition, flex spaces, require different kind of model. But yes, we are open. If anyone comes with any innovative idea, we are always open. My email is there. Please reach out to me. So what again? What do VCs want? See, this business, as I said, in our minds, this 20% is going to flip over. So for us, from a long-term perspective, this is going to be an attractive place to be. It is going to be very crowded because the moat of starting this business is not high. Anyone and everyone might say, I can do it.
Correct.
There is no technology moat if you don't use it properly. So there's no strong moat. Then what is the moat? Moat is execution. Execution to prove takes time. So that's why if it's a great idea with strong execution capability, it will get funded. Broadly, two reasons. And if it doesn't get funded, does not mean VCs do not want to fund. It means there's a problem with the idea, which VCs are not able to understand. So any business, there will always be good businesses and VC fundable business. And there's a slight difference between the two. And it's a big difference. You may run a good business, which you're making good money, but it's not necessarily a VC fundable business. Same thing applies to flex spaces. You're earning good EBITDA margins. Is there a power law working? If we think there's no power law working, we will not fund it. If we feel that the founder does not seem to have strong execution capabilities, although he or she might feel that they are rock stars, we will not fund it. So there are a lot of variables in it. But broadly, let me put the big perspective. Yes, this is a very interesting space. The bigger opportunity is also, interestingly, VCs love businesses which consume capital.
Correct.
Right? And this business consumes a lot of capital. VCs never throw money, unlike all of you think we throw money. We don't. We are patient. We take 7 to 10 years to. So let me summarize. At the macro level, this is going to be an exciting macro trend. And I firmly believe that 80% of all offices will become flex. When will it happen? 2030, 2035? I don't know. But it will happen. Number two, if it's a business which is innovative, with strong execution capabilities, which is a very relative term, it will get funded. So you're all in a great space, and we are here to fund great guys with great ideas and great, execution.
I think very well said. And this is really something which most of us wanted to understand how this business has been growing for the. Paras, you are seeing this business equally from, I'll not say completely inside, but not completely outside also, right? And you have been part of this journey for the longest time. What's your thought? And again, sustainability of a business is dependent on the cash, right? Any business needs sustainability, which is cash. Now, while there is a cash, when I say cash, is that the fund which you have it, which someone has brought in at the initial part of it, right? But the growth story comes with someone funding it. And how do you see this industry coming in?
As far as funding is concerned and co-working space business, it's a beautiful business. It has a margin. It needs strong execution.
Yeah.
I think everyone has covered this. It is a staircase growth. So CD by CD you will grow. In terms of funding, either you take it as a lifestyle business, grow organically, which I would say 70-80% of our operators in India who are doing fabulous business, from one center they become 10 center, or you are extremely large, which is a private equity business, that you have something very strong occupant profile and you have a cash flow which are being blocked for 3 years, 5 years, which is managed office segment, or I would say large scale co-working business, which is 150 centers in the country. So in the middle, it's always a challenge. So either you're very large or you are, doing it as a lifestyle, enjoying it. In the middle, the solution is strategic. 30, 40 years back, if you look at IWG Group, across the world, they have acquired people doing great job at this business. So they might be one or two. So M&A opportunity is there in the middle. That's what we look at. So it's strategic. I don't see VC. VC wants scale and technology. Scale is very difficult. From 100 customer, you cannot be 20,000 customer and then 1 million customer. It's not possible. You can't open centers across the country, show that scale in 1 year. VC wants technology. Technology will always be enabler here, not the entire business. Yeah.
So you see probably going ahead times, we will see more strategic alliances. And that's where I understand where you were coming in. Then consolidations will happen and that can enable us the growth. Now, just to give you little stats on the number, 2021, Pan India number of seats were around, leased was around 68,000 seats, which was leased in 2021. In year 2022, that has grown to 100,000, right? 107,000 to be little precise on the numbers. This year, till June, it has already touched 67,000 seats, right? And this year when we see sluggishness being in US, the business is not, many IT companies work from home, hybrid, whatever we say about it. But the entire impact of real estate is still not being utilized currently, but we have seen the growth which is moving ahead. Now, the basic principle is how to stay ahead, right? And that's where I was coming up. But before that, I just wanted to come back to the audience now. We have since last 5 minutes coming in, and before I take a final question from the people here, in case if you have any question, we have the right people talking about and you can hear it directly from them. Any questions anyone wants to ask from them, please?
A data point that 80% of the demand for flex space is less than 30 seats. And when I flip that on the overall office demand for India, in the top 9 cities, it is almost 40 to 50 million square feet per annum year on year. And the interesting data points on the flip, which Ninad mentioned, is also interesting. So what will it take for us to flip? And one interesting data point, which I want you all to note, is almost 80% of the demand of the 50 million square feet resides in the 20 to 30,000 square feet requirement of corporates. Now, what will take us to reach from less than 30 seats to a 20,000 would mean about 250, 300 seats, to cater to that segment, because the flip may require us to target that segment. And what are the criterias that on the services or on the supply side you guys are thinking, and Ninad on the VC side, if you have a good executor to give you confidence that they can do that, would you really fund it on the table?
So maybe any one of you, if you want to take his question itself.
The demand side, to clarify on the 80% is less than 30 days. That's absolutely correct. There is a huge demand for companies which initially, before co-working, used to have less than 5,000 square feet kind of a demand. That is going in co-working. Managed office is growing. It's growing beautifully. Every organization, after certain scale, they want a private office. So managed office growth is also coming from ex-conventional. So they are taking the share of conventional. That's why we're seeing that from a 100% all conventional, we have 18% co-working, and then we have another 5% of managed office, which is coming from conventional. So this is on the demand side where both blend. Also, everyone, a lot of co-working space in last 2 years have started creating a hybrid model where the 50%, like they do, like 50% is an anchor client / managed office, and the balance 50% is co-working.
Correct.
That's shaping up very nicely.
In fact, just to add further on this, I know many big operators who are always focused towards the managed side of the business. I'm aware that they are working towards the co-working side of the business now. You will see, because you cannot run one side of the business and other side of the business you can grow, especially in the hybrid times, right? So I think very valid for us.
Just to add on, rightly asked, what will it take to flip the percentage? I think in order to know that, we should try to know what has brought this industry from 1 to 20%, for example. I think initial days, co-working, let's say 10, 15 years back, the ratio of spaces of freelancers or individual occupiers in co-working spaces was higher. Early occupiers, average occupiers of a co-working space was 1 to 3 seats. Then it became about 5 to 10 seats, and then it became about 10 to 30 seats where we are currently. And then it'll with the onset of managed office players, it'll keep on increasing. I think the learning here is, as you get to know about the demands of different market segments, you try to adapt the services according to that. So earlier, for example, freelancers and co-working spaces needed, freelancers and individual people needed community. That was the most important thing that co-working spaces offered. It slowly and gradually moved towards private offices. What medium-sized company need in a private office space. And now it's going towards how enterprise would cater to its employees in a co-working space. Interestingly, I was in an event 2 days back, organized by Knight Frank. They mentioned return to office is more critical for larger enterprises than small enterprises. Small enterprises are more towards 80-20 ratio, where 80% have already returned to offices and 20% are on a work from home scenario. Large enterprises are still at about 50-50 ratio. So for large enterprises, it matters more on subjective matters like how is the total mental well-being, for example, catered to in a co-working space? How is food and beverages, for example, served in a co-working space or a managed office? So I think while we are working on those things, this average number should increase and the flip should happen very soon, is what I think.
I think, thank you. Sorry.
Short answer is yes.
Short answer is yes. So, yes, please.
I started my career in real estate as part of the setup team of Colliers. And then I worked with Anuj, and that's how I met Mr. Karpe. You know, when I started my career, my boss was a gentleman called David Fowler. He died last year. He was in Australia. And he introduced me to a gentleman called Kamal Mittal, Parpur Business Center. In '96, he was doing co-working spaces, just that he didn't call it a co-working space. It's like Mother Teresa was a social impact entrepreneur, much before the word social impact entrepreneurs was coined. And his biggest differentiator was quality of air.
Correct.
Apart from, managed office spaces and flexi office spaces, short duration, no deposit, but premiumly priced, right? It's a narrow place, still fantastic quality of office space. Are we looking at the quality of air as a differentiator? Because he in '96 explained to me how the particulate matter is an important constituent in the well-being of your health, and how the quality of air in every office space is not good. This was 96. That's 27 years back. So I have met almost all the bigger operators. I have not seen anyone talking about quality of airspace as a differentiator.
I think
Okay.
very valid point, Mr. Batra, especially what has happened post-COVID. I think everyone has been talking about many things, but this is very key thing. Probably that can be a cue
I
for...
can add to that.
Sorry, my time is up. People are chasing me here. So, and we have a... Yes, the last one, please.
So we have installed AQI sensors in across all centers where we monitor carbon monoxide and carbon dioxide both, with and adding fresh air in the system, HV system. Nowadays we have got better HV system, HVAC system, which
Correct.
can add more fresh air to it, and plus quality filters.
No, I think many of the people have already started thinking from that perspective. Some of you have implemented this, some of you probably is a work in progress, but thank you so much for being patient for this. And I would like to thank the speakers here for the amount of knowledge sharing which has happened in this session. And I think we wish we could have continued this for much longer time, but I think off stage, we will keep talking about it and share our ideas perspective. Thank you so much for this.